The market sells off sharply, testing the limit down circuit breaker. Is it the era of the bear, or can the bull fight back? This is Invest with Jacob. Okay, guys, so over the weekend, the market sold off very sharply, getting close to that 7% down circuit breaker area. The NASDAQ got to about 6% down and the ES to about 5 and some change. And this sparks the question, is this the era of the bear, or can the bulls fight back? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the big sell-off, they got close to some very important support levels, so let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And we got very close to the April lows here. NASDAQ actually poked right below them and then rebounded. But this is a very key area for the market to hold. And there's a couple of reasons for that. First of all, it is a series of higher highs and higher lows, this being the last higher low. And breaking below that would be a lower low off of a lower high. And that is a trend change in the market, or a change of character in the market. The second thing is that Elliott Wave Theory has corrective depth theory, which tells us that wave 4 of a larger degree should not go much deeper than wave 4 of a prior degree. And for this to remain bullish, we would want to hold this low so that this wave 4, and we'll get into these counts in just a minute, so that this wave 4 down can hold this wave 4 down, and we'll see how that works out. This is something that I've talked about for quite a while now, that when and if, we're not there yet, there's still a ways to go, this can still rebound and be one more push for a high. But when we do get to the selling that I am looking for and the bigger correction that we've been talking about, it will be very sharp. It will be very COVID-like selling. There's probably a chance we will hit limit down on some of the days. And that is something to keep in mind if you're trying to carry long positions or carry long-dated positions where you're trying to swing for a number of weeks or months even, especially to the upside. Now, that doesn't mean, again, that the top is in yet. We still are holding this key level right now, this April low on both charts, until that fully breaks. And remember, guys, a break isn't this. This is not a break of that low. If they come down and, poke just below it over here, that's not a break. A break is where they come down below that low and then fully break down, like well below it, go back test it, and hold, and then continue to push down. So just a spike below like the NASDAQ did today is not a break of the level. So we are holding that level for now. So there is a bullish count in place. We haven't called the top just yet, but the bears are making a charge at it. And I still think this looks better with one more top. So I am a little bit hesitant to think the bears are pushing down, especially given the structure overall. But let's talk about the counts and what that looks like. So off of this low back here, if we're going to talk bullish first, let's talk about the bull option. That would mean this is 4 of 3. This move up was 5 of 3, which I don't really like. It's not a very good structure for that. And this move down is a bigger wave 4 that would hold wave 4 of 3. So again, this would be 4 of 3 over here, the 5th wave of 3 up. Then you get an ABC down for 4 that holds the prior wave 4's low. So this is a wave 4 of 1 less degree because it's a wave 4 of a wave 3, whereas this is just a wave 4 down here. So they hold the same level. And then you would look for one more push up. Now, as we've been talking about, this move up off of the lows from October of 22 has been a very big diagonal. So we would look for this move up to be in 3 waves, as most of the moves have been. And that would take us toward the 58.31, 58.50 area overall. So that would be the bullish option, is that this is a bigger wave 4. You'd have an ABC up in wave 5. It'd be very volatile, a lot of whipsaw. Because of that ABC structure, you're going to get a lot of 3 waves up and down movements. So it's going to be very volatile, which the VIX is reflecting right now. And that would be the most bullish option. The secondary option would be the primary bear count. And again, until they break the April lows, I call this a bull market. So that's why it's the secondary option right now. But blowing through this 52, this low right here, this 52.75 low, blowing through that was a big blow to the bull case, because this could have been a diagonal that went back up and finished out. It was not. So now we're looking at this as a larger wave 4, which again, this structure is not great for that. So the bearish option would be that we are trying to complete, you have a wave 1 and a wave 2, and then you had wave 3 complete down here at the 1618. They bounced it back up. They can take it as high as 5308.75. Really, they can take it up to 5377, but you'd really prefer they hold this 5308 area and give us one more low for a fifth wave down. A fifth wave down would be much better looking here. If the low they spiked here yesterday doesn't really have a 4 or 5 in it, so the bounce yesterday off of that low, as long as it can hold under the 5308 area and push down and make a new low, that would give us a 5 down structure, which would be acceptable with a leading diagonal in the front, and then a wave 2, 3, 4, and 5 to the downside. So what we would look at overall for the bears is that. And a secondary option would be that we're going to take a more corrective downside approach, where this is an ABC. We don't get another low, and they bounce it in a corrective structure back up, and then they bring it down in a bigger C wave that starts a bigger breakdown. That would entail holding under 54.93. Your two main targets would be 54.22, which would be the rejection of these two lows right here. Lines up pretty nicely with that. Or the 54.93 area, which would be the rejection of this middle area. And then your kind of line in the sand is going to be 55.81.75, which lines up perfectly with this breakdown from the B wave top. And we could see that be a common, we often see that as a common retrace, especially if we're fighting for a top. The the bulls give a big bull trap where we get a ABC up into this area. They're able to hold. Everybody gets long again, and then they bring it back down like this. So the key area, 54.22 to 55.81, needs to hold. You'd really prefer the 54.93 hold, but again, in these topping situations where you're in a strong bull market and it's trying to flip over to a bear market or a corrective phase, you would want to see them. A lot of times you see the bulls get aggressive and get all the way up to this breakdown area, the 764, and then turn over from there. So we are kind of in a holding pattern right now to see how this move down concludes, and more importantly, to see what happens next off of this low. So they got the start of a bounce. If they can hold it under this 5308, 5377 area and push it back down and make a low, that would be the most bearish outcome. If they can hold the low from yesterday and start a much stronger ABC up, that ABC is going to ultimately need to break through, again, 55.81.75. That would be the most bullish outcome. And anything that gets up into this 5400 to 55.81 area and fails back to the downside and makes a new low is a secondary bear outcome. So right now is not a time to be super aggressive in your trading. You can day trade very well with this volatility, but swing trading, there's a lot of options until we get a little bit more structure in place. Once we have that structure, we'll be a lot more confident about the overall pattern that we're looking at. But again, if they come down and break the April lows with some steam and then back test them and fail, then that is a strong sign that this is the top, and we'd be looking at a much, much, much bigger correction, with the first leg of that correction going down toward the 3,500 zone or the October lows of last year. So keep that in mind, that if the April lows break, and break with, like I said, not just a stab through them and a reversal, like a true break of that level, then we would be turning from kind of the neutral area we're in right now to bearish at that point. So I told my group today below 52.75 is neutral, all the way down to the April lows. And the closer they get to those April lows, the more it turns into neutral to bearish. And if they break the April lows, then I would turn bearish. But right now we're still in a neutral stance. They have still not broken the April lows, and until they do, this is a bull market. Over on the NASDAQ. Okay, so on the NASDAQ, again, they did come down to the April lows. They actually poked just below them and then rebounded pretty strongly off of them. We would want to see the NASDAQ basically hold 18,348 at this point. If they can hold 18,348 and then continue to the downside, that would start to be a very bearish outcome for this market, and I would look for the top to be in. The NASDAQ can also have a more corrective structure to the downside, where you have an ABC right now that has hit basically the 1.0. So the 1.0 was down here at 17,491. They came down just below that and spiked. And the NASDAQ would also be looking for a structure back to the upside. And their key levels are going to be the 19,169 level and then the 19,596 level. If the bears can hold below those two levels and then push down and break the April lows, then you would have a pretty bearish outcome on your hands, and I would call the top likely in on the NASDAQ. So that's what you'd be looking for as a bounce. So the most bearish outcome would be to hold 18,348 and push directly lower for another low into that 16,600 to 16,100 area. That would be the most bearish outcome. The secondary bearish outcome would be to push higher into a 19,169 to 19,596 area with 20,124 kind of being your line in the sand. You want to see that hold. If they get above that, we turn back bullish again. And then finally, your bull outcome would be a structure that rebounds strongly, breaks back over 20,124 on its way to new all-time highs in the 22,000 area. So that would be our overall paths on the NASDAQ. Again, we're in that kind of holding pattern because we didn't fully break down below this low. So we're in that. We broke this low at 18.5, which is very big support for them to break. That put us in a neutral stance on the NASDAQ down to here. This is our neutral box, right? Below this box, breaking back below that box, below the April lows strongly would put us in a bearish state in the market, and breaking back above 20,124 would put us in a bullish state. So right now there can be a lot of whipsaw in here, a lot of chop, a lot of sideways action, but there is a lot of volatility. The market is moving in big chunks. So that is something to be very cautious about. Very good for day trading, very tough to swing trade. So keep that in mind as we watch the market move, that if they're going to go make a new all-time high, this would be a wave 3, this would be a wave 4, and we'd have one more push up in wave 5 like this. So very, very cautious time right now in the markets. I would not want to be overextended to the long side until I saw some confirmation that we were really going to start to rally again to the upside with a strong rebound in the market. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it, become part of the trading team, interact with the group, interact with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose just by checking us out. We also have our educational material, our Elliott Wave 4 Beginners online course, and our Advanced Elliott Wave course. These courses are helping people understand this complex market and make money. It is making this market simpler to trade. In our advanced course, we go through a lot of these complex structures that we're seeing right now, like diagonals. We also go through your advanced fib levels. We go through double and triple threes, flats, triangles, trading Elliott wave, conclusion. So all of it that we go through here helps you understand the complex patterns in the market. As you can see on the screen, our traders are really loving this and it's helping them make money. Now, if this is too advanced, I completely understand. If you're just getting started with Elliott Wave, I understand that as well. And that's why we have our Elliott Wave 4 Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very difficult to understand why good news makes the market go down and bad news makes the market go up. This is because news cycles don't matter. We see it in earnings all the time where you have a blowout earnings and the market tanks or the stock tanks, or you have terrible earnings like Tesla did 2 earnings ago and the stock skyrockets higher. It's very confusing, and it's because Elliott knew that the news cycles are garbage long ago. He knew that key levels mattered, and he knew what happened when those key levels held and what happened when they broke, and this gives you a huge advantage over the rest of the market. This course is 25 videos where I go through 3 parts: your introduction, where we go through your mindset and emotion, your expectations, your KISS method, and why Elliott Wave works. Our chart setup and tools, where we go through all of the tools you need to use with Elliott Wave Theory and why we use them and how to use them, as well as the Elliott Wave 4 Beginners area, where we go through each of the waves, how to measure them, how to understand these key levels, the pivot, the corrective depth theory, the theory of alternation, everything you need to know to understand this complex market in a way that makes sense. The really cool thing about these is if you want to get them at a discount and get both courses, we have our bundle pack where you can get both of them for $37 off. This gives you a nice discount on the courses, but if you want to pay nothing at all and get the courses for free, simply sign up for one of our monthly rooms. as all of our training material is included in those rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through several different charts, including individual stocks as well as the indexes, as well as some other indicators we use, show you what to expect in the counts and where we're at, and what to expect moving forward, and all of the training material you just saw. We trade the SPY and the QQQ and we swing in day trades. We do trade quite often in my room. However, if you're looking for individual stocks, futures trading, income trading, and PT's advanced training, you need to check out PT's throne room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income method trading that netted 87.5 ES points last month, and that's about an average of 50 to 60 points a month. And you get his reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures those trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. The market has stretched down to the April lows, and we are looking at a few different outcomes, and we're kind of in a neutral area right now in the market. A move down that breaks the low and breaks the April lows overall would be an indication that the top is in, and we are looking at a much bigger correction to come. However, a move back over the 54.93 area would be our first indication that the bulls are trying to take back the market and take this back to all-time highs towards 58.30 to 58.50. So we do need a little bit more information from the market and a little bit of structure before we have confidence of calling a top or calling a move to all-time highs. On the NASDAQ, same situation. They came down and actually poked through the April lows, but they didn't fully break them. They just came and tested the area. We would look at that as a potential wave 4 as well. We are looking for the NASDAQ to give us a little bit more information overall. Any move back over the 19,596 area would be considered bullish, and we'd be looking back towards all-time highs in the 22,000 region. But if they're able to hold below 19,596 and break the April lows with some authority and force to actually push down and break that level and not just poke through it, then we could be able to call the top in and likely look much lower on the NASDAQ. Guys, that is your market update for today. I'll talk to you tomorrow.